Thursday, December 19th, and yesterday was a big moment, right? The FOMC. Looks like Bernanke's going to start tapering next year, so it looks like interest rates are going to stay pretty low, and I think that'll be pretty good for the stock market, actually. So I think we're going to get another nice run to the upside like we saw yesterday. Look at the this is the daily chart of the TNA, the small cap bull shares. If you recall, I've been long this since last Friday, I believe, right? When the market pulled down beautifully right to the 50 exponential, created a tight little inside vertical bar, took it out to the upside. If you recall, we were long here at $66.80. Basically 2 days ago, the market hit the first profit objective of $69.05. Yesterday, I moved my stop up to $67.33, but about 20 minutes before the FOMC announcement came in at about 2 o'clock, I removed that sell stop at $67.33 to give it a little room for the initial reaction off the news, okay? Because always, when you get the FOMC meeting, you get some major news, the market reacts both up and down, and then it starts to settle and starts to move in one given direction. So what I want to do here is I want to show you an intraday chart of TNA, right? I want to show you a 3-minute chart of TNA. Let's look at that. All right, take a look at this chart. This is the 3-minute chart yesterday. Market started kind of selling off a little bit before the news, came down. This was only 68 and change, right? And then the news hit there at 2 o'clock. See this big spike right here? You always get a spike either up or down, and then it starts to move in the other direction. So the market came down here, just barely went through the 67.33, my initial stop. Okay, went to 67.07, and immediately started rallying. So this was my game. This was the game plan. Okay, so to remove that stop, to give it room, so I wasn't just nicked out of an initial move, right? That was false. So I waited. I wanted to wait for the first 3 minutes to print. The first 3 minutes after an FOMC meeting, you can help. That helps give you a bias of what's going to happen depending on where the market breaks to, either up or down. So what I like to do is I look I use a 3-minute chart when day trading. So the market spiked down, right? This is the first 3-minute bar of that FOMC meeting announcement right there, okay? Came down 67.07, and then immediately started staging a pretty big rally, closing right here. So at that point, I was looking for either the high to be broken at that 3-minute or the low. If the market had proceeded to move lower and break down through the 67.07 and break down through the low of that 3-minute range after the FOMC meeting, then at that point I would have just exited the trade, because either way, I mean, I would have still made money on the remaining portion of my position. Remember, I got out of this. I got out of 3/4 of my trade at 69.05 from a purchase of 66.80 a couple days back. So either way, I was going to come out a winner, even if I ended up breaking even on this trade on the remaining portion of the position. So once the market broke up through that 3-minute range after the first 3 minutes after the FOMC hit the tape, then at that point I started to manage accordingly. So it broke up through the high, hit this. As it started coming down, I was going to manage that trade below the 200 exponential right in here. Move that TS trailing stop up to below the 200 exponential moving average off that 3. So this is where we closed yesterday, right? $71.76. $71.76, not too bad. Right now, we're trading about 71.33, so the market's going to open up roughly right in here, 71.33. But what I'm going to go ahead and do is I'm going to trail my stop now. I'm going to below 69.46. Okay, I'm going to go to 69.36. Will be a trailing. And I did take a portion off of the trade at 69.62. Remember, if you recall back, my second profit target was $69.62. So as the market rallied, I did take a little portion of that trade off at 69.62 right in here. So I've even got a smaller position now, even less than 1/4 of my initial. Okay, only a quarter of my initial position I still have on, and that is going to be moved up to 69.36, which is currently 10 cents below the 200 exponential moving average. Okay, and if you again, if you take a look at a daily here, remember this is the all-time high right here in the TNA, right? If we look at the E-mini S&Ps, looks very similar, but we're a lot closer to that high. We actually touched that, huh, in the S&P, so right there, yeah, 1806 and a quarter, 1806 and 3/4. Actually, in the S&P 500, remember this is the continuous chart, but it factors in the last contract month and the current month, front month, which is March of 2014. So we're at the all-time highs in the overall S&P market, whereas in the Russell, right, the Russell, the TZA, which tracks the Russell, oops, wrong one, we're getting close, but we're not quite there yet. Right, this chart here is the actual futures contract. All right, so this is the daily chart of the futures contract, the March 2014 contract. So we're at let's see, 1131. So we're getting close to that high, 1143. We're still off the highs. So I'm suspecting the market will probably come back up and retest that high, since the S&Ps have already done it. So we'll take a look. Hope that helps. Have a profitable day. I'll be back with you tomorrow. Bye for now.